All right, good morning, everybody. Today is October 9th, 2024, and I'm back with another edition of the live show. I know a lot of you guys watch this on the replay, which is fine, so lots to talk about this morning. Um, all kinds of stuff to talk about. The important thing is today's probably going to be relatively dull because everyone's waiting to see what the inflation numbers are tomorrow. And I believe that the consensus for headline CPI is like 2.3%. I saw a graph of all the different Wall Street firms' predictions, and seems like 2.3% was the consensus. So if you've been paying attention, you know that the numbers that are being released seem to be suspect because for quite a while now, especially like the jobs numbers have been revised, and a lot of these numbers they come out with great numbers. They meet expectations, and then they get revised later, and so there's a there's a lot of people that don't trust the the government statistics that come out, and with good reason. It's hard to know, but in the past, the revisions seem to be significant in some areas. So anyway, that's going to be important because the Fed cut 50 basis points and they're on their easing cycle, and now all of a sudden, crazy crazy as it is, interest rates have actually gone up, right? And mortgage rates have gone up. Like the 30-year home loan rate's gone up since the Fed cut rates. So that's pretty bizarre. And of course, there's been considerable weakness in bonds causing rates to go up, and so that's kind of a head scratcher. And another interesting thing is that lately the odds of the Fed cutting as much as everybody thought they would have diminished, and so instead of a 50 basis point rate hike, or I'm sorry, rate cut at the next Fed meeting, all of a sudden now the market's down to 25%. So that's kind of interesting. So everything's kind of in flux and changed a little bit, and there's just a lot going on. So tomorrow is going to be extremely interesting. I wanted to take a look at the year-to-date performance of the futures. And this is a chart that I get from FinViz, which you can pop over to FinViz and hit futures and performance and then choose year-to-date. But this is always cool to look at. It's really skewed right now this year. Well, so far this year, and that's kind of not cool, but it is what it is, because normally the distribution looks normal, except for the fact that for whatever reason, I haven't been paying attention, but cocoa is up 379% year to date. So that's pretty crazy, and I haven't even looked into that, so um, I don't know how that affects the price of hot chocolate, but we're getting towards that season. Anyway, it's interesting to see the performance of all these other futures instruments, and quite frankly, I mean, this is a really cool resource just because it gives you kind of a year-to-date look at how everything's performing. And it's kind of, it's a horse race, right? And so it doesn't necessarily reflect, what's going on in the short term, but this is basically from the beginning of the year until now. It's interesting to see that gold and silver actually outperforming the S&P and the Nasdaq. But of course, I always talk about, like the price of silver is pretty low. I mean, it's around what, $30 or something, and so a very slight change is a significant percentage when it comes to something like silver. That's probably the same thing with cocoa. I'm not really in tune with what the price of cocoa's been doing, but Interestingly enough, orange juice up 58%. I think that's a relatively thin market, and of course there's a hurricane right now barreling towards orange juice country, so it'd be kind of interesting. I haven't looked at an actual chart of it, but some of this rally may have begun recently, so it's interesting to see as far as futures goes, and of course the actual indexes typically vary a bit from these futures. But anyway, the point of this, look down here at the bottom, natural gas. That's kind of interesting. Natural gas, corn, lumber. Remember when lumber was going crazy and everybody was talking about it, and the price of lumber was like had just soared, and it's come off of those highs considerably. So everything is always in flux, and of course you're measuring it, like this graph is measuring it from an arbitrary point in time, which is kind of important for things like the indexes and this and that. But some of these commodities, you really have to look at a chart to sort of get a perspective on, like coffee up here, up 41% year to date. That's a pretty big deal. But my point of bringing this chart up is, what is inflation really? Right? So the way that the CPI is calculated and measured, well, since I've been following this stuff closely, they've changed it several times, and that's how they do it. So, are CPI and cost of living the same thing? No, absolutely not. All right, let's go to the S&P here. This is a pretty interesting little spot that we're in here, because last week at this time we were kind of dipping down, and I had drawn this big support level here. I mean, it's about as clear as can be as far as support, and for all intents and purposes the price came down and sort of retested that support. I mean, it didn't quite get into it, but I mean, there was a few days there where we got just a little tiny sort of dip that got bought up really quick, right? So, as I said, for all intent, and I'm still getting over a cold, by the way. So last week was rough. If you watched the show last week, you may have noticed that I was coughing a lot and stuffy sounding. I still don't sound like myself, I don't think, but yeah, a little bit of a cold for the past couple of weeks, and of course this time of year with the change in the weather, it always seems like I get a cold in the fall. So, but luckily it's going away. S&P 500 is literally knocking on the door of new all-time highs, right? So I think tomorrow's CPI is going to has the potential to send this thing either breaking out significantly or kind of like a double top up here. See, that's the whole thing about it. Is the funny thing is, and if you've been hearing the news about China, right? So China has unleashed this big stimulus that has encouraged people to speculate in the stock market, and I've been reading a lot of comments on it, and one of the comments is, let's just take a look at this. First of all, it just the Chinese market just kind of went parabolic. It was up like 30-something% in this amount of time right here, and then all of a sudden, then there was talk of, well, the stimulus wasn't as big as everybody had hoped. It wasn't as aggressive as everybody hoped. And then you can see that, all of a sudden now it's down huge. And so, I mean, this is just craziness. It's just craziness because the comments that I've been reading are that, it's encouraging speculation in the stock market, which is not, obviously the stock market's not the economy. Right, like the economy is it's kind of it's a weird relationship, right? If the economy slows down, then the central banks introduce stimulus, which essentially means create money out of thin air, which is, good for asset prices, and it sends stocks and hard assets higher. But I mean, can you really fix a slow economy by creating money, by the government creating money out of thin air and throwing it out there? And so, I mean, there's schools of economic thought that say that you can, but in this day and age, I mean, as far as we've come now, it's become kind of a ridiculous thing. So you've heard the old, bad news is good news, right? So the more the economy, if the economy's not doing well, then the government creates, well, I shouldn't say the government, but the central banks, which essentially are the government, create money out of thin air, and they have their stimulus, and so it's sort of a vicious cycle, and that's one of the reasons. Let me just pull this up here. That's one of the reasons, and that's been going on here for a long time. Let's go to a monthly chart of gold, right? So it's no mystery here that the price of gold is basically right up at the highs in the history of the world. And so, you might see, let me go back. This is interesting. I didn't realize how far back this chart went. Well, let's just go back to 2000, right? Pretty amazing. So look at this. I mean, back in 2000, gold was like, around 400, right? It was actually below 400 for a bit of time here, and then basically, it spent a lot of time just hovering around 400. But I mean, so what you're looking at here is basically, 25 years of the price in gold in U.S. dollars, right? And there's a website that I've been to before. I think it's goldprice.org or something like that, and you can look at the price of gold, the price of the physical gold, the commodity, in all the different currencies. And so, gold's been money for thousands of years, and basically what this is telling you is, the purchasing power of your dollars is being evaporated, and every other currency on the planet. And so that's basically what this is telling you, and that's no mystery. Everybody knows that. And if you guys have been watching this show, if you've been watching the show for the last 15, 20 years, right? You remember what we were saying about, gold back here. So in theory, if you've been paying attention, studying this stuff, and you're familiar with all this, and I'm sure most people listening to this show have read plenty of the gloom and doom stuff, but I read a lot of books on this type of thing, back here. And basically, what you get with the price of gold is it's everything can be measured in gold, right? You got the gold oil ratio, you got the price of gold in various currencies. In theory, it maintains its purchasing power over long periods of time. And so what you're seeing here is essentially the purchasing power of the US dollar, being eroded significantly over this time frame. And what's scary about that is, well, and so in theory, like, in 2009 here, when gold was 1,000 an ounce, what something that would cost you like $1,000 worth of purchasing power is now $2,600. So, I mean, inflation is something that we've been harping on for years and years and years. And there was a period of time back here. There was a period of time where I think the actual inflation rate was understated, so for a long time. And then of course, the pandemic came along, and that just basically threw everything off. So that was a huge sort of shift in everything when the pandemic happened. Oh, so I accidentally, this is interesting. I accidentally clicked on my chart that is not a candlestick chart. So lately this has been my go-to chart here, right? So you guys know for a long time there I was liking open high low close charts, and I still do, but I'm uh I'm not going back to, but candlestick charts. Candlestick charts, just for the fun of it, especially looking at individual stocks, right? There's a couple that I mentioned a couple of weeks ago, and well, actually, let me click on the chart of my watch list because I got it marked up here. So you remember, 2-3 weeks ago, I was talking about AMD here and a couple of the other semiconductors, talking about the W pattern. And what's interesting about this, you can see, and this is actually kind of crazy because we had the W pattern, right? And there was the center of it. I need to look that up and see if there's a word for that. Probably not, because I mean it's it's basically a W, and the high of the middle is sort of that's the price to beat. But what's interesting about AMD is it came up and it tagged this trend line like, to the pixel, and then pulled back into and consolidated a little bit in that zone, and now it's starting to break out of it, right? So it's a pretty decent little follow through there. And so you guys probably, it was probably 3 weeks ago I was marking this up. I mean, it was right around here when it was starting to poke out of this W. So anyway, looking pretty good. At the same time, of course, we looked at, let's look at ARM. I think we were looking at ARM at the same time, and I don't really have any marks on here, but it's got kind of a convoluted W working. It's got a little work to do. It's pulled back here. Let's see, Nvidia, I think, obviously is one that everybody's focused on. So when we talked about Nvidia, it would have been sort of back over here. This is actually, I guess I could mark this up right now because it's got it's got that W pattern working and it's busting out above it. Look at that. Whoops. I swear one of these days I'm going to bite the bullet and I've already got Nvidia in the list. I mean, I kind of am used to these stockcharts.com, but TC2000, I believe, is, for like 15 years when I was doing this show, when we were doing the show, Doug and I were doing the show, 3 mornings a week, right? I was using free stock charts, and man, it was so easy to mark up those charts, and I was zipping around and I'd mark stuff up, and whatever you put on the chart, it just saved it. And then when you came back, it was still there, and it was 2 or 3 times as effective for just zipping around and bouncing around and marking up charts. And so, there's a lot of things that are really super clunky as far as stockcharts.com, but it seems to be one of the, like the most popular ones, so I was already using it for some things. Anyway, Nvidia's on a tear here, and boy, these were dip buying opportunities, obviously, and so it's looking pretty good. It's just starting to emerge from this W, and of course, there's a humongous resistance overhead here, but and now that we're into the fourth quarter, there's going to be a lot of cross currents, I should say, in the market. Especially institutions need to show their performance, right? And so they can't, hedge funds and money managers and all this. They're obviously going to need to chase some of these stocks, and And of course, everything is sort of up in the air going into the election. I wanted to look at, I guess I could just type it in here. It's in my watch list, but well, actually no. Let me, because now here I am. I'm back to I'm back to the open, high, low, close chart. So let me pull it. Well, oh yeah, I guess I saved this as open, high, low, close chart. So the news last night or yesterday that I read was that the the government is talking about breaking up Alphabet. Imagine that. Imagine that. And so look at Alphabet here. There's the 200-day moving average. There's the 50-day moving average. There is the big point of resistance that I drew some time back. I mean, it's pretty clear. So here's the interesting thing to note here, right? I've been kind of harping on these W patterns for, a while and speaking about them more recently. And so this is sort of the opposite. You got sort of an M pattern here, right? It's not really, if you kind of visualize it, obviously if it had gotten some mojo and broken over 170 here, it could be sort of viewed as a big cup, but what I see here is more of sort of an M pattern. Now, of course, the left side of it didn't come down, so it doesn't really look like an M, but it does. I mean, you got the two humps here, so it's going to be interesting to see what happens. I've never been a huge fan of. I mean, at I'm always mystified at how Google has been so successful in recent years. Let's look at a weekly chart of this, and the reason is, right? It doesn't look so bad here on the weekly chart if and only if it can bust above. I mean, it's at a really significant pullback. Only if it can bust above that 170 level, right? If for some reason the news is good and the buyers step in here and that breaks above 170, then there's a lot of upside. But I wouldn't touch this thing right now because it's looking extremely vulnerable. All right, look at this. Back here in 2021, it started to head down and had a few bounces along the way, but that was I spent 2 years, right? I mean, that was 2 years of a sell-off there. So, um, but the interesting thing, what I was getting ready to mention, is that I've never been a huge fan of Google because I've been using ad blockers for years now, probably 10. And so I don't see ads on the internet. I don't see banners. And I mean, it's just they're just, simple browser extensions and they're free. And so why anybody would tolerate, obnoxious ads. And the other thing is that, I read a lot about this stuff because I'm an internet guy and a computer web guy and all that. And so, um, you know, Google Ads have the potential of, you know, giving you malware and viruses and all that stuff. And I mean, they're just, that was one of the main reasons. If you really want to be safe on the internet, right? Like I have Malwarebytes and I have their browser extension and it's blocking everything, and I have script blockers and ad blockers and all that because I don't want to take a chance of, for security purposes. And so what blows my mind is that literally, half of the people on the internet aren't blocking ads. So, and that's always been, Alpha Google's big moneymaker thing is their ads, right? So I don't quite get it. I don't quite get how they make so much money on their advertising when everybody on the internet should be using ad blockers and not seeing Google ads. Anyway, they got their hands in a lot of other stuff, and they do offer a lot of cool stuff. But the other thing, I've never used Gmail. And I don't have Chrome on my computer because I just, that's their whole business model is just, invading your personal data. What?
I was gonna go to the pet supermarket.
All right. Be done in a minute. Sorry about that. Anyway, I'm not a huge fan of Google, and it's going to be interesting to see what happens with. It's going to be really interesting to see what happens with whether they're going to get broken up. I wonder what that would look like. All right, so real quick, let's look at a couple of other things. There was a couple of stocks I wanted to start. There's a couple of stocks that I had my eye on, right? That I was looking at. This is one of them. See, I'm on a daily chart here. This is an interesting looking chart right here. I mean, obviously it's in pullback mode, so um, but at the same time, this might be a stock might be worth keeping an eye on. Why is that line green? Huh. All right. So that's kind of interesting. Keep an eye on that. What I meant to draw here was there's a spot right here. And I mean, stocks like this can keep going down, and then it can pop down here. I mean, there's a ton of support down here at about 20 bucks, right? And then of course, ton of support, and then of course, that would be, I guess that would be the thing to to have green. So if for some reason this thing gets some mojo to the upside, breaks that trend line, breaks back above this 200-day, just above these highs here, somewhere in that neighborhood, would potentially make for a decent entry because stocks like this, I mean, obviously there's something going on here. And the other thing to take a look at is how persistent this pullback has been, right? Very persistent. And obviously it's still headed down, but just an interesting looking chart to me. So you don't see a whole lot of these type of charts. I mean, this pullback's been going on since mid-August. Let's see, there was a couple other ones I jotted down. Um, S, right? This is I remember when S was the symbol for Sprint, right? So this has got kind of an interesting looking chart too. Um, Draw a rectangle on here real quick. There's this whole sort of zone right here. There we go. Let me zoom out a little bit on this. Yeah, there we go. So I was just looking through some charts, and it's kind of a longer term chart, but this thing, and this is a little messy too. It's a technology software company, but it's got a little potential here because it's forming one of these big giant cups. Kind of sloppy. I don't really like how deep that went. Let's see what else is on my list. I jotted this down too. Oh yeah, this ANF. I've never ever liked retailers and never liked them. But here's the thing: is like if you pretend that you're just looking at chart patterns and not paying attention to anything else. Oh, this is so annoying, I swear. I shouldn't have to actually click on the chart to place that line. I guess it's just me. It's just me. It's not stock charts. There we go. I used to be able to do this so much easier back in the good old days. There we go. Yeah, the thing about a lot of these stocks nowadays is they're probably fundamentally overvalued as hell because if you've been paying attention to the Warren Buffett indicator, as I mentioned, oh, and so the idea would be if this stock, can meander its way over here and break out through both the trend line and this horizontal resistance area here, then it can rally back up over here, right? At least from 150 to 175, and then perhaps higher. Just a good looking chart pattern, right? I mean, there's so many stocks are sort of extended nowadays that I always like to. That's another thing that annoys me. I mean, I always like to look at ARC. I've got ARC. I've got ARC marked up two different ways here. I've got that one, and I've got this one. This is the weekly chart here, right? The weekly chart's a little bit more instructive, I think, and I mean it's pretty amazing. So I mean it's almost 2025 here, and so we're looking at spring of 2022, and so it's just basically trading in a sideways period, right? And obviously you guys remember, you remember what it did look like. So I like to pay attention to this because it seems like it's a proxy for risk tolerance, so and animal spirits. So, I mean, the animal spirits obviously aren't running as high as the major indexes would lead you to believe, even though, pop over to IWM here. IWM, this huge multi-year, this is a weekly chart, pushing back up against, prior resistance from back in 2021 and, trying, but is sort of struggling now. So this is going to be interesting to keep an eye on, and it's pretty volatile too, right? I mean, look at the ranges on these weeks here. So it's going to be interesting to see what IWM does, but the main takeaway from this is that the small cap stocks, I mean, are trading, at the beginning of 2021. They're literally trading at the same spot. So it's 4 years of nothing, which is a long time, right? So obviously, S&P's doing great, Nasdaq's doing great, but the small caps are just struggling. Even though they're really close to all-time highs. It wouldn't take much to send this up to all-time highs, but it's kind of it just goes to show you that everything's all about the large caps. Well, anyways, hopefully next week everything will be better. Hopefully that hurricane won't be as bad as the doomsayers on TV like to make it out. So fortunately, I'm in Florida, but we're way up north, and it's going across the state to the south. So I don't think, hopefully, we won't have too much effects from it. But you never know. We're definitely going to get some wind and rain. Um, and so, real quick, I will leave you with the weekly S&P. It's been a few really narrow range sort of weeks here, right? I mean, you can see the ranges of all these other weekly candles here, and the past few weeks have been kind of boring. It's like the market's it's up at the all-time highs, but it's sort of on hold for something, and I think the inflation numbers the next couple of days are going to sort of tell the tale. So anyway, thanks for tuning in. I will see you back here, same time, same place next week.